Hey guys, it's Jonathan. I got 3 charts to show why I'm very concerned about this market. And we're going to start right here. Lots of data, right? We're going back to 2015. Right now, this hasn't happened. Let me dig into it deeper. Here we go. Okay, so I'll get back to that first chart, but let me set it up a little bit. In front of you, we're looking at 2 lines, right? We have a light pink and we have a purple. The purple line is a study of the volatility of the major indexes. So we have the VIX, which is the S&P or the SPX. We have the NASDAQ. We have the Dow. And then we have the Russell. And you can see them all right here. We are looking at the volatility of those 4 indices. Now, let's go look at the pink. Pink. We've tried to replicate a basket. We're just using 4 stocks. We could use 100 stocks. We're using 4 stocks. The 4 stocks that we chose to use, we're going to use Apple, Amazon, Google, and Goldman Sachs. And you can see it right here. Boom, 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 boom. So what we're doing on a higher level is we're comparing the indice vol to the individual stock vol. That's what we're doing. That's what's in front of you. That's where you see these lines are. Now, if I take these off, because I want to simplify things for you, if I can bring your attention over here, we're looking at the difference between the equity versus the index vol. That difference is at negative 1.17. Also, said a different way, over the last 2 years, the difference between these two is 7.53% off the lowest level it's ever been. And let me clearly show that in chart number 2. Now, chart number 2, the chart that we started at, all of this is, it's the difference between the previous pink line and the previous purple line. But I hid those because I don't want to look at those. All I want to do is look at the difference between the 2. Now, this chart goes back to 2015 and shows the difference between the indice vol and the individual equity volatility of those 4 stocks. You can see, if I draw a line here, the difference between these 2 stays in a range, right? I would say the mean is probably about 10. And the range is 5 on the low side and 16 on the high side. We're looking for outliers. We're looking for relationships to break down. That's what I have for you right now. The relationship is the lowest it has ever been. I'm taking you back 5 years. This is a lot of data. I got one more chart to wrap it all together and why right now I want you to be extremely cautious because risks are elevated. Now I have you at chart 3. Remember, these charts are building on one another. So what do we have here? Well, the blue line is going to be the SPX. The white line is the same chart as I just shared with you. The white line is the difference between index volatility that we can see right here and individual stock volatility right here. Remember, it's the difference. So chart 1 showed you the purple against the pink. Chart 2 took away the purple and the pink and just showed you the white line, the difference between those 2, right? The white line here, it's just the difference between those 2. But what do we have here? Look what's going on right now. This is the major disconnect. Whenever we see something happen that hasn't happened going back 5 years, it's a red flag. We want to be aware of it. So right now, because these have broken down to such an extent, it's my opinion that risks are elevated and this market is rolling over. I cleaned up the chart a little bit so we can look at other times when the relative difference got low. Now remember, we're not just low, we are at a brand new, never before seen level. So if we start looking here, we can see we got a nice little sell-off in the equities. Here, we got a handsome sell-off in the equities. Here, not so much, but we sure did right here. Here, we sure did right here. Here, fell as the market rallied, but definitely obviously getting toppy, rallied strong, came right back down, and that's when the overall market just got annihilated. I'm bearish, guys. 3 charts. These are the reasons of why risks are elevated. Protect your trading account. Jonathan Rose, owner, Masters in Trading.